Good afternoon, everyone, and to all our members who are viewing us from all over the country and from diaspora. My name is Mary Awuor. I'm a mortgage expert at HARAMBEE SACCO. Welcome to our today's webinar and thank you for joining us. If you have any question, kindly put them in the comment section and we will answer them after this session. So today I'm your guest speaker for today. Today we are discussing key highlights of our mortgage loan product that we offer at HARAMBEE SACCO. So thank you and feel most welcome. If you are joining us for the first time, kindly like all our pages and kindly remember to hit our subscribe button for our YouTube. Thank you. So what is our discussion today? So our discussion today is about the key highlights of the mortgage products that we offer at HARAMBEE SACCO. So I'll begin by defining what a mortgage is. So what is a mortgage? A mortgage simply means a loan that is used for purchase of a house or a home or any other real estate. A mortgage is a long-term loan which is secured by the property itself or a landed property. So who refinances our mortgage? So our mortgage is refinanced by KMRC. KMRC is Kenya Mortgage Refinance Company. So we are refinanced by KMRC. KMRC provides long-term loans to primary lenders such as SACCOs, banks, microfinance institutions at low and fixed interest rates. So as HARAMBEE SACCO, we are proud to be the largest shareholders among SACCOs with a total shareholding of 25 million shillings. So we will begin by discussing the products that we are having for mortgage at HARAMBEE SACCO. So what are our loan products? So our loan products are: one, HARAMBEE Home Loan. So HARAMBEE Home Loan is a loan that is used for purchasing a mortgage. The second one is HARAMBEE Jenga loan. So HARAMBEE Jenga loan is simply for home construction. So I want us to begin discussing the first one, which is our HARAMBEE Home Loan. So what does it entail? So HARAMBEE Home Loan is for purchase of a single dwelling or for building. HARAMBEE Home Loan is an outright purchase of a single dwelling residential house or for a standalone house or a unit within a flat. What is the purpose of a home loan? The purpose is strictly for owner occupation and not for rental. So what are the features of our HARAMBEE Home Loan? So the maximum loan amount should not exceed 90% of the purchase price or open market value, whichever is lower. The applicant must raise the mandatory 10% of the purchase price, and then we finance the 90% in form of a mortgage loan. But one is also at liberty to ask for less than 90% if he or she can raise a higher personal contribution from his or her pocket. So what are the features of other features of HARAMBEE Home Loan? So the features are as follows. There is closing and processing costs, which are estimated at not more than 9% of the property value. So a member meets the cost directly or may be granted a loan by the SACCO in case a member does not have the cost of 9% to pay. But the loan, if granted by the SACCO, should not exceed more than 60 months. So for the Harambee home loan, there are fees that are required to be paid. So what are the fees involved? The first one is valuation fees. So for valuation fees, the percentage is 1% of the first 2 million plus VAT. The second fees that is payable is processing fees, which is 1% of the loan amount, the total loan amount that we are granting the customer. So there's also the legal fees. The legal fees is charged between 1% and 2% of the loan amount, the total loan amount. There's also the requirement of stamp duty. The stamp duty is charged at 4% of the property value, the total property value. There's also the insurance premiums that are charged for our home loans. So what are the interest rates for our loans? So the interest rates for the loans are at a fixed rate for the entire period. So the rates of the interest does not change throughout the loan period. So remember, our loans are charged at an interest rate of 8% if a customer applies for a loan within 10 years period and below. So the rate is at 8% per annum, not per month. So any loan granted for more than 10 years and above, the interest rate is 9% per annum. So the interest rate is calculated on a reducing balance, just as other Harambee loans. So if you compare it with the SACCO loans, it's actually cheaper. The interest rate is cheaper because the highest interest rate that we charge for our back office loans, the highest interest rate is for Inuka loan, which is a 96 period loan, is 15.5%. So it is still cheaper for a customer to apply for our mortgage loans because the interest rates are manageable. So what is our maximum loan term? So our maximum loan term is 25 years period, or subject to one's retirement age, which is normally 60 years. For those in self-employment, we also offer mortgage loans for those who are self-employed, but the period is at 15 years, or the difference between their age and the insurable age. The insurable age in Kenya is 60 years. So what are the maximum loans that we give for our mortgage products? So the minimum loan product is 500,000 shillings, Kenya shillings. So our members may look at it and feel that the amount is not adequate, but you may find that someone has already begun putting up a construction, and the person may be needing only that 500,000. So you can still come to Harambee Sacco and apply for that loan, an amount of 500,000 to finish up whatever is remaining in your construction. The maximum period for our loan is 10.5 million Kenya shillings. Initially, when we began our loan products, the lowest amount was 500 and the highest amount was 4 million. But it has since been increased to 10,500,000 for urban areas like Nairobi, Nakuru, Mombasa, and 6 million for other municipalities. However, the minimum loan amount is determined by the ability of one's ability to pay, and subject to applicable home loan terms and conditions are still applicable. So for our home loan mortgages, we have mortgage insurance policies that are involved with these mortgages. So the first one I want to talk about is the mortgage protection policy. The mortgage protection policy is a life insurance policy, which our customer takes to cover the loan amount taken against death. In case of death or permanent disability, then the insurance pays for that loan. In the event of death or permanent total disability, the loan is payable, is paid through the insurance, which is the mortgage protection policy insurance. The second one is the domestic package policy. So the domestic package policy, this is an insurance cover that covers the property against any theft or fire. In case of fire or theft of materials that are used for construction of the property, the owner can claim for insurance in that matter. So domestic package policy covers this. So other applicable security for the mortgage that are required for mortgage application is a title deed or a certificate of lease. So for one to apply for a mortgage, you must have a title deed that is in your own name, or a certificate of lease that is in one's name. And the property that is either being bought or the plot that a person wants to put a construction on must be within a municipality, a town, or a city. So we don't give mortgages for plots in rural areas like ancestral land. Anything that is not within municipalities or towns or cities, we don't give mortgages for such properties. So in other words, the SACCO does not finance agricultural or ancestral land due to the challenges that are related regarding security in case of any default. It is very difficult to handle such kind of security in case of someone defaults the loan. So other features that are connected to these loans are the processing fees, the mode of repayment. So I'll begin by stating the first one. So how do we pay when you take our mortgages? How are our members supposed to pay these loans? So our home loans or Jenga loans are payable through check-off system or through FOSA. In a case whereby your salary, a customer channels his or her salary through our FOSA, our front office services activity. Now, do we allow early loan repayment? Early loan repayment for our mortgage loans are allowed and at no extra cost for the member or the borrower. So what are the application requirements for our mortgage loans? So the first requirements I want to talk about is the identification documents that are needed for one to be able to apply for these loans. So the first one is a clear copy of your identity card, a clear copy of KRA PIN certificate, a copy of a marriage certificate or affidavit. If the applicant is doing a joint application with a spouse to purchase or to put up a property. So the second requirement is property documents. What are these property documents? So the property documents are letter of offer or draft of sale agreement from the vendor, which is stating the property details and the sale terms of that property. The other document is a copy of a title deed, which must be in a customer's name or a certificate of lease for the proposed property, which is also must be in the name of the person applying for a mortgage loan. Another requirement under property documents is a proof of land rates and rent payments. You must prove that you've been paying the land rates for the land that you want to put a property on and the rent payments. Other application requirements for the mortgage products. So once you met the first application requirements I've talked about, the identification documents, the property documents, then now we vet your capability by looking at your financial statements. By your financial statements, I mean your pay slips, your bank statement, so that we are able to see whether that customer can repay that loan comfortably without any problem. So once you meet those requirements, then you complete and sign a loan application form, a mortgage loan application form, which is different from the normal loan application form. So you also need to bring in your income documents. What are your income documents that are required? So one, there is the letter of introduction by the employer telling us that you're actually employed by a particular organization, and identifying a customer as their employee. The next one is 3 months most recent and certified pay slips from your employer. You also need to attach 6 months most recent and certified bank statements from your bank account. The last one is irrevocable authority to your employer for monthly deductions via checkoffs. So the next one I want to talk about is HARAMBEE Jenga loan. HARAMBEE Jenga loan is given for construction of a single dwelling residential house unit, not for rentals, but basically for a single dwelling residential unit. You are not allowed, you cannot be given a loan to put up, let's say, units for rentals. It is for single dwelling residential only. It's also for a standalone housing unit. For example, you can put up a bungalow or a mansionette or a townhouse, depending on what a customer can afford. You can also put a separate unit for staff quarters. With that, I mean you can build a servant quarter within your compound, which is detached. Let's say a detached servant quarter, DSQ. This is also considered as part of the single dwelling house. So we don't limit you to putting up only the single dwelling residential. You can add a servant quarter to it. You can build a servant quarter in the same compound. So the purpose for Jenga loan is strictly for owner occupation and not for rentals. So applicable mortgage insurance policies for Jenga loan, as we've discussed up there, is the same. The only difference between Harambee Home Loan and Jenga loan is that it has a workers' injury insurance policy. A workers' injury benefit insurance policy covers for workplace injury compensation to ensure that the employees working at the construction, their health is not at risk. So in case of any injury of the workers while at work, the insurance takes care of the related expenses to ensure that the workers are safe at any given time. There's also the contractor's all-risk cover. This insurance covers the project during construction phase against damages on the structure or theft of the materials that are being used for construction of the house or of the property. So in case of theft or any damage, a customer does not lose because already you have a cover to cover you for that. So what are the other application requirements for Harambee Jenga loan? So other requirements for Harambee Jenga loan, you must have approved architectural drawings by qualified. It must be done by a qualified and certified architect. The second one is approved structural drawings from a qualified and certified structural engineer, especially for mansionettes. The third one is priced bill of quantities, which we normally refer as the BQs. And construction schedule from a qualified certified quantity surveyor. There is also the priced bill of completion for ongoing projects by quantity surveyor that a customer must meet. The other requirement is an integrity report from a qualified and certified structural engineer for stalled projects. This should be more than for 6 months. The report is supposed to be more than 6 months. There is also approval by National Construction Authority, the NCA, the National Construction Authority of Kenya. The other one is the professional profiles certification for consultants involved. For example, the architect, the quantity surveyor, the structural engineer, the contractor, or the foreman. So what are our mortgage unique selling points that we may talk about? So our mortgage unique selling points are as follows. They have lower interest rates at single digits of 8% per annum for below loans of 10 years, and 9% per annum for loans that are applied for over 10 years. So if we compare these loans with our SACCO loans, the lowest SACCO loan rate is at 12% per annum against our mortgage loans, which the highest is at 9% per annum. So that's a big advantage for those who want to acquire our loan products and put up houses. The other unique selling point for our loan products is that the loan repayment period is up to 20 years, which is a very long period, and it gives our customers an ample time and pay at low rates and subject to retirement age. It allows for affordable equal monthly installments. A loan, for example, a loan of 10.5 million repaying of 25 years for 300 monthly installments at 9% per annum translates to Kenya shillings 168,186 per month. Unlike our longest SACCO loan term, which is Inuka loan, which is payable in 8 years, that is 96 months, at a rate of 15.5% per annum, it translates to 191,478. Compare with the rates for 10.5 million for our mortgage loans, which is payable over 25 years. So the monthly repayment translates to 186 per month. That is quite some big difference. So another unique selling point is that the loan is on reducing balances, enabling the principal repayments and or early loan redemption. It saves members or the borrower on interest paid, the interest that is payable. Another point I want to talk about concerning the mortgage unique selling point is that it's an immediate and definite home occupation with no further rent payment. Imagine you put up a house with our mortgage and now you own a house. You will avoid that problem of paying rent, yeah, which is a plus for our customers. The next one is also, on that point, you will avoid paying rent. Which may be very expensive. You can use the amount that you've been paying rent with to service our mortgage loans, which are very low interest rates compared to the market rate. Another unique selling point is that collateral appreciates while the principal loan balances also reduces. So the client gains value of his or her money. Remember, the assets always appreciates. And the income, in case of rent, you will reduce on expenditure, unnecessary expenditure. So, who is eligible for our loans, our Harambee mortgage loans? You must be a Kenyan citizen, 18 years and above. And you must have an income to be able to apply for that loan. So, another important point to note is comparing a mortgage loan with our back office loans. The back office loans, you need to look for guarantors. While the mortgage loans, it is the property that is covering you for these loans. So our customers will definitely have a peace of mind. Remember, most people would like to be discreet in their dealings. Not many people would want to go for guarantors. So the mortgage product would give you that peace of mind, that hassle of looking for guarantors. Given that the mortgage loans are higher, assume you wanted a loan of 20 million and you want to look for guarantors. It is very difficult to get guarantors for such loans. So the other product I want to talk about is the collateral lending. We also have collateral lending at Harambee Sacco. So for collateral lending, we charge the property that you already have. So the property stands in the place of guarantors. So in a case whereby you are applying for a loan and you are not able to get guarantors, and you have a property that you've already bought or put up, we can charge that property and give you money without struggling to look for guarantors. So for collateral lending, you must first qualify. You must first meet the qualification of our back office loans. You can either take is.Let, Inuka loan, development loan, or any other loan. But in the place of guarantors, we will charge your property that you've already acquired to stand in the place of guarantors. So I think we are coming to the close of our presentation today. So for those who are still joining us, kindly hit on our subscribe button so that you'll be able to receive more of our updates in future, or more of our webinars as we hold them in future. Kindly hit our subscribe button and subscribe to our YouTube channel and our other channels like Instagram, Xspace. We are on Xspace. We are on Twitter. Kindly subscribe and follow us. So as we come to the end of our presentation, I want to thank all viewers for taking your time from your busy schedule to join us and listen to our today's presentation. So for those who are still joining, or those who have joined late, you can send your question and we'll be able to answer them as we finish. So I'm going to answer the first question that has been asked by Christopher Mwangi. The question is, can a new member, let's say 2 months old, receive a mortgage product? The question is, can a new member, let's say, who is 2 months old in HARAMBEE SACCO, can such a member receive a mortgage? Remember, our mortgages are not pegged on our share deposit. So if you join us, let's say within the 2 months that we are talking about, the 2-month period, and your pay slip is, when we look at your income and we calculate leaving you with a third. Remember, you are supposed to remain with a third of your salary. Anything on top of that, we will look at our mortgage calculator and see how much you can afford depending on your income on the pay slip. Then we can go forward and start the processes of giving you a loan. So yes, it is possible, simply because the mortgage loans are not pegged on share deposits of HARAMBEE SACCO. I'll go to the next question that has been asked by Brian Kevo. The question is, can I apply for a mortgage loan if I have a running Inuka loan? You buy off the Inuka loan. Give me the mortgage or build for me a house. It's yes or a no. Why do I say it's a yes? It's a yes, assuming Brian Kevo maybe has started a construction process of a house. Assume you are building a house and you've already started building and you've reached maybe up to the lintels, and maybe you're only remaining with an amount to cover the roofing, then we will calculate, looking at your payslip, your income, and also look at our mortgage repayment schedule and see how much your income can give you. Then, if the amount in question is able to cover for the remaining part of the construction, then we can proceed and top up the loans and give you that amount. That means you've already put in an amount from your own saving to put up a house, and you're only remaining with a small amount to finish up the construction. Yes, we can go on and pay. But on that matter also, we must calculate and see, if we look at your pay slip and top up the loan that is running, how much are you going to remain with? Is that amount able to finish up the remaining part? If it is not able to finish, then we cannot give you that loan. Remember, mortgage loan products must finish either buying a house or putting up a building to total completion. Mortgages, you cannot use a mortgage and say, like, I will build a house, and maybe you've not painted, you've not put in the finishings, because it is something that must finish. It is an amount that must finish a house to completion. You can't say you are going to buy a house halfway, the remaining part you will pay later or pay slowly in installments. You must either pay for the house fully or put up a construction fully using the amount that you are given. So I think I've answered your no and the yes. So no, if the amount is not able to cater for the remaining part, maybe for building or buying a house, then we cannot give you that, because that is already a bad loan. So our loans, when I started, I said our loans are refinanced by Kenya Mortgage Refinancing Company. So we pay our members, we process and pay the loans first, and then we refinance. So if you give a bad loan, what will happen to our members' money? That will be definitely a bad loan, and our members will lose. I think I've answered that question. The third question is from Charles Isaiah. What if I got a plot and needs a mortgage loan? Can I be given to build my own property? Yes, Charles Isaiah. We can give you a loan only if the plot you have acquired is within a municipality or a town. If the plot is on ancestral land, anything out of the municipality or a town, then it is not possible. So the mortgage loans are only used for putting up or buying properties within the municipalities or town setup. The fourth question is, can the housing levy that is being charged from the payslip contribute to the mortgage? No, the house levy does not contribute to the mortgage. So Dominic Opio would like me to repeat the fees paid for Harambee home loans. So kindly allow me to go back and answer this question. Repeat the fees paid for Harambee loan. So the first fees I want to talk about, the mortgage loans are charged at 1%. The processing fees is charged at 1%. I'd mentioned that earlier. It's 1% on the total loan being given. So assume you are taking a loan of 10 million. The processing fee will be 1% of the 10 million, which is 100,000 Kenya shilling. That is the first fee I want to talk about. The other fees that you will pay is the valuation fees. The valuation fees on mortgage is 1% on the first 2 million. And this is plus VAT. I hope I'm clear on that, Dominic. The next fees I want to talk about is the legal fees. The legal fees, because for these loans to be processed, we involve external lawyers. So they are the legal fees that are payable. So the legal fees are between 1% and 2% on the loan amount being granted to a customer. The other fees I talked about is the stamp duty fees. The stamp duty fees is charged at 4% of the property value, the value of the property, which is normally done by Harambee valuers. We have a panel of valuers who have been vetted by Harambee Sacco, who does the valuation for Harambee mortgages. So the stamp duty is at 4% of property value. There's also the premium insurance. Insurance premiums depend on the amount of the total loan amount a member is taking. David Macharia is asking why we involve external lawyers, yet we have our own lawyers of Harambee Sacco. So David, I think my answer to that is there is that bit of conflict of interest. I believe there's a belief that the internal lawyers may be compromised in a way. So it's better to use the outside lawyers. I think that's the reason why we use external lawyers and not our lawyers. Remember, you cannot do business with yourself. Next question. So another person is asking whether a new member can acquire a loan, can go on and apply for a mortgage loan. Yes, you can get a loan. You don't have to save in form of share deposit to acquire that loan. We only need to look at your financial income and your bank statements to know that you can qualify for that loan. And you must also meet the other mortgage requirements of ensuring that the house you've identified to buy is within a municipality or a town center, or the plot that you want to use for construction is within urban centers or town centers and not outside or ancestral land. David Macharia is asking, he would like us to address the issue of insurance regarding mortgage. I will go back and repeat so that it's clear for everyone. So David Macharia, to answer that question, the applicable mortgage insurance policies that are involved with our mortgage loans are mortgage protection insurance policy. This is a life insurance policy to cover the loan amount against death or permanent or total disability of the person acquiring the mortgage. So in case you have acquired a mortgage and a person dies or maybe get involved in an accident and become permanent disabled, the mortgage protection policy covers that. So in other words, in the event of death or permanent disability, the mortgage protection policy pays for the remaining loan balance to the SACCO to ensure that the SACCO does not lose. The other mortgage insurance policy is the domestic package policy. The domestic package policy is an insurance that covers the property against any theft or fire. In case, with that I mean, in case your property is destroyed by fire as an accident, or the theft of property, of material at the site, then the domestic package policy covers that. David Macharia, I hope I've answered everything. So I think we have come to a close of our presentation of today. So I want to thank our viewers, all our viewers, for staying tuned, to be with us, to watch us, and to listen to our today's presentation. We are hoping to do more of these presentations in future. Thank you for staying tuned with us.